As President Trump tells America to get ready for a painful 2 weeks, bond investor Jeffrey Gundlach said on Tuesday he believes the coronavirus sell off is not over yet and that the lows hit in March will be surpassed in April due to uncertainty over the outbreak. Gundlach stated that, I think we are going to get something that resembles the panicky feeling again during the month of April. In March, the S&P 500 lost 12.5% in its biggest monthly decline since October 2008. Gundlach said that the market is acting somewhat dysfunctionally and that we will get back to a better place, but it's just not going to bounce back in a V shape back to the January 2020 level. As you would expect, corporate profits is all but certain to drop in the first quarter as America shuts down. That being said, some analysts think profits will double or more with some S&P 500 companies. So, let's take a look. But make no mistake, for most of the S&P 500 companies, profit in the first quarter is not headed higher. However, according to Investors Business Daily, 11 companies in the S&P 500 are expected to record 100% or higher profit growth. This chart shows you the 11 companies and include Western Digital, real estate firm Digital Realty Trust, and chipmaker Advanced Micro Devices. As you know, I recently bought and sold Digital Realty. I may look to get back in, but only after it calms down a bit. Consumers are stuck at home looking for diversions. Analysts see this translating into added profit for companies that make home life more entertaining. So the list includes several companies that will fill that distraction gap. Included are cable operator Charter Communications, toy maker Hasbro, and video streamer Netflix. With the first quarter not quite over yet, some companies' estimates will likely fall. This is most true for energy companies. With oil prices crashing, many of these estimates will likely be way too optimistic. At least investors don't trust the estimates for energy companies, and that's why the prices are falling. So it's interesting that several energy companies are showing up on IBD's list. These include Phillips 66, National Oilwell Varco, and Marathon Petroleum, among others. You may recognize some of these companies as I have talked about them recently, as I believed a rotation into energy was not far away. Recent circumstances have impacted my opinion, but I am still of the belief that energy companies are becoming interesting investments. So much so that when I sold Digital Realty, I used some of those funds to begin a position in energy. So I bought XLE, which is the Spider's Energy Select Sector. So let's take a look at our charts on XLE. And we're looking at the 20-year monthly chart on the Spider Select Sector Fund, the Energy Select Sector, and the symbol is XLE. And as I just stated, I have now a position in XLE as of today, Tuesday. So the close on Tuesday, 29.06. However, in the past few days, we've been this low there from perhaps this general trend line here near $60 a share. We fell through the floor here just recently based on all of the circumstances that you're well aware of now. Back to this price, 29.06. You have to go all the way into 2004 to find similar prices. Well, there's a reason we're that low. Let's go here to the MAC. You can see in the MAC that it's still heading on down. The fast line is still heading down, and the slow line is following shortly thereafter. Are we going to turn here soon? Hopefully so, but only time will tell. Again, we're at the bottom there, somewhat consistent with 2016, but below 2009. So things are pretty bad. Move down here into the histogram, you can see pretty much the same thing. Very negative there, about as negative as we were here in 2015, 2016. 2009 was more negative, but that's just simply this oscillator. Other oscillators are showing the true negativity of XLE. Here into the price rate of change, at that point there, negative 28.29, pretty low. Same thing here in 2015, and there also in 2009. So we're competing with those time frames with regard to the current circumstances. Here into the RSI, 14.14, very low. At that point, the lowest in the 20-year history here. Into the stochastics, pretty much the same thing as we've seen before. Volume kicked up, of course, in the last couple of weeks. And then the Williams hit that negative, near negative 100 at that point there. We're still in the oversold territory, but I think it's going to bounce out. It may take some time. So that's what I said is I just started a position in energy with the XLE. I anticipate buying more later on. I'll probably do a staggered purchase as I indicated or suggested to you in previous videos, suggesting a 25% initial purchase and then each month thereafter another 25%. Moving on up into the price chart. So if you do as suggested, 25% say each month, then you can be sure that you're going to get near the lows. Now, maybe this stays lower than 4 months. I don't think so, but it is a possibility. So understand the risk. For me, I'm going to be in this position for quite some time, years. So I have no problem holding that long. For you, make sure you have a similar mindset before you jump into energy. And for today, that's ChewDog Charts. Thank you.